Hey guys, it's Kerry with eXp Realty here in Los Angeles. Thank you for joining me on my channel today. I have a lot of valuable information in the next upcoming half hour. This is actually a virtual buyer's presentation that I did live on Facebook with my lender during lockdown, and we actually bust some buyer's myths, including you have to have 20% down. So stay tuned for the answers to all these questions. And if you haven't hit subscribe for more valuable videos that'll come your way. And thanks again. I appreciate you being here. Have a fantastic day and enjoy. Hi guys, welcome to our home buying seminar. We are live today. I'm here with Natalie Salines of Movement Mortgage. We are just at 7 o'clock, so I'm going to give people like a couple minutes to kind of log on, join us. But we're going to be discussing how to buy a home in this market and busting some home buying myths and position you so that you can buy in any market. But let us know that you're here. Like, give us some hearts, give us some likes, and if you have questions, please comment below so that we can help you out, because we are here to provide value for you. So you have a minute to go grab your glass of wine or your popcorn or whatever you need. Shouldn't be too long, but so yes, we are live now. So let us know that you're here, because we can't really tell. Awesome. Well, I would like to introduce you to my special guest, Natalie Salines of Movement Mortgage. Hi, Natalie.
Hi.
So Natalie, while we're waiting for people to log on, can you give some of the people that are here on time, a little bit of your background in the mortgage industry?
Sure. Yeah. I've been doing mortgages since about 2004.
Oh, wow.
And I started it countrywide.
Mm-hmm.
And I was there until they went bust and transferred over to B of A.
Uh-huh.
And that was a difficult 2 years. I was there for a couple of years.
Uh-huh.
And then realized that, mortgage banks are really my thing.
Okay.
It's a closer relationship to the people you work with. We'll say that. So I moved to Prospect Mortgage. I was there for almost 5 years.
Mm-hmm.
And then I've been with Movement Mortgage about 5.5 years.
Excellent. And you're a branch manager, correct?
Yes.
That's awesome.
Yeah.
Very good. Well, I appreciate the help that you've given me in the past. You're absolutely amazing. I just want to share this with some people. This is our little seminar, and this is actually Natalie right here next to this cute little dog. I worked hard on this slide, so I wanted to show you guys. So if you're just joining us now, let us know you're here. Give us comment below if you have questions that we don't answer. We're here for you. Give us some hearts, give us some likes. This is your seminar too. We're just the ones that are talking. But yeah, I am paying attention to your questions. So anyway, so basically what we're covering today is 5 home buying myths and 3 bonus myths, because there's a lot of information out there, and as a new buyer or there's a lot of misinformation. So it can be really overwhelming. So this is why I wanted us to do this today, because the market's a little bit wild right now, and and so having bad information is not going to help anybody. So that's why we're here today, folks. So without further ado, I think we should just get started with some of our myths.
Yeah.
Very good. So the first, so these are the 5 myths about buying a home in today's market. The first one is you must have 20% down. So what do you think about that myth?
So that is, I always feel like this is the biggest misnomer in mortgages, because so many people don't have 20% down, especially in Los Angeles. It's
Yeah.
extremely hard to
I
save
know.
to get to that amount, you know.
Right.
Most people nowadays have that 10% down.
Mhm.
Even in our jumbo market, we have a lot of people with 10% or 15% down right now. But I have a lot of different programs that will allow for less. So I've got 5% down, 3.5% down FHA, 3% down. And I even have a program called CalHAFA that is 100% financing. So 0% down.
And how does that one work?
So it's 2 loans and one becomes forgiven. So it's a 97% loan and a 3% loan. So it's basically, you're supposed to put 3% down, right? But they give you the 3%. And as long as you're in the property for a while, it's forgivable. You don't pay interest on it or anything.
That's incredible.
So it's great. It's like a grant. It's a 3% grant. And
what do you have to qualify for that?
So the good stuff, you know, you can't have terrible credit. You do need a decent credit score, not incredible, but you need a decent credit score. You have to legitimately be a first-time home buyer, not almost a first, like it has to be your very, very first purchase. You can't have owned anything in the past ever. You can't even have inherited a property. It has to be your first property.
Okay.
And the ratios, my debt ratios, I do have a limit on them that's a little bit lower than other programs where I can go higher on the debt income ratio. So it's a little bit stricter, but not even that much.
Well, I mean, for what they're offering,
right?
That's crazy. Oh my gosh, that's amazing. And then if you're military, they can do a VA loan.
VAs are best, 100% financing. And Movement Mortgage doesn't charge any lender fees for our VA buyers.
Oh, I love that.
Yeah. And we actually have a special program happening right now for anyone on the front line where we're giving $2,500 towards closing costs and fees for anybody on the front line.
I love that. That is really amazing. That's incredible. That's wonderful. Well, let me go back. Let me show some more slides. So that's a lot of really great information that I don't think that a lot of people are aware of, because
it's true.
Yeah, like most of my friends, like if I talk, well, have you ever thought about, it's like it's not even a possibility in their minds, you know, because they think that, oh, you have to have 20% down. So there are programs available for people.
So many. Yeah, it's shocking to me actually, because there are so many people I talk to every day that are like, we're almost at the 20%. So we're still saving and we want to do the 20 and we're almost at the 20. And I'm always like, why? You don't have to, but I'm happy you're saving. It's good.
Yeah.
But, you know, 15% down is a really minimal mortgage insurance payment. And start looking. Don't wait, you know.
So just in case some people aren't aware of the mortgage insurance, can you touch on that real quick?
Yeah, of course. So the reason people have this 20% set in their mind is because it is considered risky to have a loan that's over 80% of the value is what we call it. So 20% down. 20% down gives you 20% equity. So your loan amount would be 80% of the value. When your loan is over that 80% of the value, so let's say you put 15% down, now your loan is at 85%. When it's over 80, you have to get something called mortgage insurance.
Okay.
It's like any other insurance. Whenever there's risk on something, what do you have to do to it? You have to insure it. Yes. And that's what mortgage insurance is. You have to insure a loan. They deem it risky if it's over that 80%.
Okay. Well, yeah, that definitely makes sense. I would want if I'm funding somebody, I'd want them to have insurance on that. So the next myth is, hold on one second. You must have a perfect credit score. So where do you feel like a good ballpark for a credit score should be at, now?
So good is, I'd say, 700 to 720.
Mm-hmm.
720 to 740 is very good.
Mm-hmm.
740 and above is excellent.
Mm.
When you're under 700, let's say 680 to 700, it's considered like okay credit.
Okay.
It's good enough to get a loan, that's for sure.
Mm-hmm.
I can do a loan for somebody with a credit score of 580 with our program with FHA.
Mm-hmm.
But that has a lot of guidelines to it as well. That is a more tricky loan, of course. As long as you're 620 and above, I can do a standard conventional loan. Nowadays, it really depends on the strength of the file with how much money down you're expected to make based on where your credit is. So if your credit is at 620, 3% down, that's probably not going to work right now. It's gotten tighter. The guidelines have gotten a little bit more strict. But as long as you're at 660 and above, we're still finding that we're able to pull approvals with less than the 20% down, so to speak.
Okay. And have you ever worked with clients that have had lower credit scores to help them, boost it up a little bit? Or are you able to advise them?
Absolutely. Yeah. If it's something that's an easy fix, I can help them fix it and raise it. If it's about like a cool algorithm of like, pay this credit card down by $48 and your score will go up 3 points, and pay this one down by like 700 and your score will go up 10 points. There are some things that we can do in that way.
Okay.
If it's troubled credit with like a ton of lates, we call those derogatories. Then we advise you to go to a credit repair person, because that's going to take more time, and you need a specialist to work with you on that.
Okay, that's great. But there's still hope for people with challenged credit. So that's
absolutely.
That's great. All right. So then that is going to bring us to our third myth, which is now is a bad time to buy a home. So what are your thoughts on that? Because like people think, oh, there's a recession, so there's going to be a housing crisis.
Yeah. So I've been saying this a little bit. I think it was Goldman Sachs, I believe, that came out and said, you can see this right here, that the past 5 recessions, only 2 of them, only 2 of them went under where housing percentage went down.
Which is amazing.
And one of them was legit a housing crisis.
Right.
So in 91, that's really minimal. You can't even really count that. But obviously in 2008, it was a very large amount. It was significant. And that's because that is the crisis that it was. We're in a health crisis right now.
Right.
Well, I'm not going to go into anything else, but that's no.
Can you explain why like what's happening now is not 2007, 2008? Oops. Exactly.
No, not at all. And that's what this quote that, again, I believe it was Goldman Sachs came out with, that said, the fact that we are not in a housing crisis and that this is a health crisis, and that we actually expect real estate to get us out of this crisis. Yeah. Real estate is here now to help us with the crisis, not hurt us. So that we do believe, and it kind of feels that way right now. A lot more people are interested and finally feeling confident enough to buy. And it's a great buyer's market. It's actually a great seller's market. It's kind of both right now. Rates are so low.
Yes.
So incredibly low. And yeah, people are out there purchasing.
Yeah. Now you said that the other day you locked somebody in for something really low.
2.99, probably.
Wow.
Yeah. On a 15-year, I have 2.5.
Oh my gosh.
Yeah, it's very, very low.
That's amazing. That's really good news. And you know, if you're thinking about buying a home right now, like there's less competition because there's some people that are too afraid to go. I mean, and I don't blame anybody for being afraid to go outside because like things just keep getting weirder every single day. But,
Yeah.
you know, there is less competition. Like normally you might put an offer in on a house and you have 11 other competing offers and that price just keeps going up and up and up and up and up. But if, you know, you're going in and you're seeing your perfect home and you need to buy right now, you're not going to have as much competition and the interest rates are so low. So it's actually a really good time. It's a scary time in the world, but it's a good time to buy. So let me go to the next, or just flying along with these. So this one is really interesting because this slide is you should purchase a home at the top end of your pre-approval, meaning, you know, you're going shopping for a home and you get pre-qualified for $800,000, but that doesn't necessarily mean that you should buy that home at $800,000 just because you're pre-qualified for it.
That is correct, actually. That's a myth. That's an odd myth. You buy the house that you feel comfortable spending the mortgage payment on. That's right. The most important thing, you know, and that's what we do when we pre-qualify and pre-approve you is we hop on the phone and we chat about what those mortgage numbers look like, what options you have with down payments. And we come to a place where you feel confident in knowing the exact number that you can go up to that hits your max comfort level. Yeah. You know, regardless of what you're qualified for, anybody who's a standard salary W-2 borrower is going to be qualified for higher than they want to spend because we qualify on your gross.
Right.
So what you net and take home is much less. And you have that automatically every pay period. You don't get that choice when you're a W-2 salaried employee. So most likely we're going to qualify you for much higher than what your actual comfort level is. So.
I gotcha. Now, when you do get pre-qualified, so you get pre-qualified for $800,000, so you're ready to go shopping, but there's still a lot that needs to happen with that file.
Well, when you're pre-qualified, yes, because that means I haven't reviewed a lot of the documents and have not pulled credit. So there is a difference between pre-qualified and pre-approved. Pre-qualified is just like I've chatted with you. Maybe you've sent me a couple documents. Maybe there's an application, but no credit pulled and stuff. Most people aren't going to accept pre-qualification letters right now, listing agents and stuff.
Right.
So when I pre-approve you, it means I've reviewed all of your documents. I've pulled the credit. And even above pulling the credit, having a pre-approval means that I've pulled a desktop underwriter. We call that a DU. Oh. So it means that I have a pretty strong case that your file is going to be approved when it goes in for underwriting.
I gotcha. That's really good to know. So when someone has a home in escrow, how quickly should they get their documents to you?
Oh, before.
Yes. So you can pre-approve people before they even find their home.
That is what is advised. Yeah. You should be pre-approved before you start looking, because anybody who's self-employed, and they might make $400,000 a year, but they only show they make $100,000 on their tax returns. So it's important to know, even though you know you can qualify for higher, that doesn't mean a lender is going to qualify you for higher. So it's really important, even more so in Los Angeles, that people get pre-approved with a lender before they start looking.
Well, it's amazing to me how many people want to go shopping and they're not even pre-qualified. Like they want to go, you know, and like at this point with this coronavirus, like, you know, in order for anyone to go and view a home, they have to sign, legal forms. And sellers aren't going to want you to come into their home unless you got the goods, you know, you're pre-approved. So, and it's very important that when you are working with your clients, that when you are requesting documents, that they get them to you fast, because time is of the essence. And the more you wait to get the documents to you, the greater the risk that they're taking with their down payment.
Right. Exactly.
So, well, that is, I mean, that's just all stuff that people should take into consideration when they're going shopping.
For sure.
So the next one is it's cheaper to buy a fixer. I hear this all the time from people, like, I'm going to buy a fixer upper, and you know, like, that's the dream house, you know, assuming that you can actually find that right now. But it's only cheaper if you're willing to do the work yourself, and finding the right fixer upper. And it also depends on the area. And then what I want to talk about is funding a fixer upper. So what happens with that when you know, someone comes, they have a fixer upper and they want to get a loan on that?
Well, that's a renovation loan. So we do have programs for that. There's two different kinds. There's a streamline and then a consultant K. Those are the two different kinds. One of them is more extensive renovations, so things that probably need permits and stuff. The other one is, with a streamline, is really just for cosmetic fixes, but there's also a limit to how much you can get. So
what's the limit on the streamline?
Streamline is $35,000.
Oh, okay. Yeah, that would just be very, you know, very light.
Basic, like a new kitchen and maybe a little bit of a new bathroom. You know, that's all that's going to get you. They need to raise that streamline amount, actually, but what can we do? The consultant K, which is just like a standard renovation loan, they'll let you do basically everything except build a pool. So you can have a house that burned down and that you're able to get a really great deal on, and you can renovate the entire home. And yes, it'll be much less money. You can find those for much less. I have a client that buys in Malibu. We've done a few loans together. Always buys like fire property, gets it super cheap. We put like $400,000 or $500,000 in renovation loan into it, and then it's worth about double when they're done.
Wow.
It's amazing. There's some great programs for renovation loans. You just have to know it takes longer. It's a harder process to get through escrow. It takes much longer, and you have to be more patient because you're working with contractors at the same time. So
right.
It's not the easiest.
Yeah, but I think someone kind of has to know what they're doing if they're going to bite off that much.
Well, for sure. So if it's a big fixer, then, and I tell my clients this all the time, like, are you gonna part-time your job while you do this? Because this is a lot. This is a big undertaking. Like, building a house in any way, again, if it's cosmetic, bathroom, kitchen, no big deal. But if it's anything more extensive than that, that's a lot. That can be a lot. And you really need a lot of time, or you need a lot of money. You need to hire somebody who can manage it for you if you're not going to be there.
Right.
You know? It's
right.
tough.
Yeah. Well, I'm happy to know about those programs that are available.
Yeah.
So it kind of gives, you know, if somebody is shopping and they're not finding the home that they like, you know, this gives them, it opens more things, more options up. So as long as the home doesn't have, like, you know, a ton of things that need to be done, you know, that's outside of their ability, you know, that could definitely be an option. I've seen people buy things where, you know, there were more things wrong than they actually calculated or had in their budget. So they just really have to do their research.
Yeah.
And have a good team and a good lender.
Yeah.
Okay, excellent. So that was actually my last of the 5 myths. And I have 3 bonus myths right here for you guys. And the first one is you should choose the lender with the lowest advertised rates. So I think you could speak to that.
You really should. No, I'm kidding. Oh my goodness. No. Look, I always tell my agents, buyers should, you know, shop a refinance when you have the home and you live in it and you have the time and you're not in contract and your earnest money deposit isn't at risk.
Right.
Shop a refi. Do not shop a purchase. Like when you are under the gun and you have a short amount of time to close this, you have a deposit sitting in escrow that you can lose. It's important that you go with somebody you know is going to close it and you know you can trust and you know is going to hop on the phone when you need them. Somebody who's available, because it's a stressful thing to do to buy a home.
Right.
And you need to have somebody that you know is going to make you feel at least somewhat comfortable during the process, or there to answer all your questions when you have them. And that is not going to happen when you go online and have some like rinky-dink online company that closes at 5, is not available on the weekends for you. Like, do you not, I get so many people asking me for pre-approvals over the weekend because they went with an online company.
Oh.
And so they're like, but we have to write a pre-approval for Monday morning and we need the pre-approval now.
Oh my God.
And I'm like, oh, okay. And they're like, well, we'll go with you if you give us a lower rate. And you're like, oh my God, oh, you're going to get yourself in so much trouble.
Oh my gosh. Your weekends are fun, huh?
Sometimes you're like, really? I can't tell. I should drop everything I'm doing right now to get back in front of it, but I do a lot of the time.
Oh, I know you do.
I do it for my agents really because they need the pre-approval because their client needs to write an offer, so I will. And it doesn't take that long actually. The buyers have most of the work because they have to fill out my application. So I just have to review it and it's fine. But I have 2 saved files, one from Quicken and one from Zillow right now, like legit right now. Zillow just couldn't do it. They didn't structure it correctly. They didn't understand the ins and outs of entertainment borrowers. And that is a very tricky thing here in LA. Anybody who's a multiple W-2, multiple 1099 entertainment buyer, it has a tricky file no matter what. And I know because I'm kind of an expert at it. I've been doing it for 16 years. It is what I am best at. And they didn't know how to structure it. And they like switched the file out 2.5 weeks later into an FHA. So they were going conventional, then they went FHA. I had an approval in 2 days. I was able to use that appraisal from Zillow. We were able to transfer it over. And I'm looking to go in for final tomorrow. And I started Monday.
Oh my gosh, that's so amazing. Bravo.
I know. We got the appraisal transfer today. Approval came in yesterday, so we're like moving forward. I have to get the CD out, but we'll, knock on wood, we'll be able to close next week. So, but it's very stressful though. And it's like a constant thing. So no, online lenders, again, do it on a refi. I don't want your business if you can get lower on a refi. That's all refis are about. Refis are to get the lowest rate possible. So let another lender who's a low rate tell you no on a refi. You have nothing lost at that point.
Right.
But on a purchase, you have the risk of a lot at loss. So
yeah, we don't want that for them.
No. If you're going to try to shop a lower rate, then go with somebody who's been referred to you and has a very good reputation. And so does the bank.
Yeah, absolutely. Okay, this is my second bonus. This one is, it's cheaper to rent than own. Now, this is kind of a, here in Los Angeles, rent is it's incredible. And it just keeps going. It goes up every year. And then 10 years, you're going to be paying what you'd pay in a mortgage.
Way more. I mean, yes, I guess overall it is cheaper to rent than own, especially if you've been in a property for a long time. But when you take into consideration tax deductible interest, mortgage interest, when you take into consideration property taxes that are tax deductible, when all of that breaks down, it's not actually cheaper to rent than own. Then when you take into consideration that rents go up, your mortgage doesn't.
Right.
Values go up. So now you're building equity. Like I have a rent versus own flyer that I can send you that it breaks it down. And after 10 years, when you've rented, you're out like 400 grand. And after 10 years after owning with tax deductions and equity, you're up like 700 grand. So it's like out of pocket with nothing, 400, or in your pocket, basically with equity and such, 700.
Yeah.
I mean, there isn't really another way to look at that. Like that is your best option for building wealth in your life.
Yes. I mean, the stock market's a little, stock market's not really the place to plant your money. I mean, I guess I've never done
unless you're a gambler, like a real gambler, then, you know, you take risks, but
yeah. But that's really great, because that's a common myth that people think. So with the programs that you have available, you can really kind of guide somebody through that process so that they could actually be on this path, so that they can build equity and build wealth. And I mean, that's amazing. Like some of the options you spoke about earlier, just there's no reason for, just you get your education, you learn about what's available, and then just one foot in front of the other and getting yourself in position to do this.
right.
So the second bonus is, it's the third one. This is the last one. This was a slide that went. That I missed. It's the cost of renting versus buying. And this is from Keeping Current Matters. And this is basically historically versus now, the percentage of income needed to afford the rent, and then the percentage needed to afford the median home. So sorry, I skipped over that, guys. But this is the last one, because a lot of people have student loan debt. So the last myth is you can't buy a home if you have student loan debt. And 43% of college Americans with student loans said that they postpone buying a home, because of their debt. So is that true? Like if you have a student loan, can you not buy a home?
Of course you can. It depends on which program we go with. Some programs allow me to use, my cat is about to walk over the computer.
Awesome. I locked mine up.
There's his little head. There are some programs that will allow me to use income-based repayment plans.
Mm-hmm.
And they're amazing. I have a client that has like $73,000 in student loan debt. Mm-hmm. And she was able to pull up an income-based repayment plan that was like $89 a month. And I'm allowed to use that for conforming programs. With the FHA, I can't. And of course, with Jumbo, I can't. But for my big main program, I can use an income-based repayment plan program. And you can get really low payments on that. I mean, incredibly low. So
amazing.
Do have to count the debt, even if you're in deferment. So if all of your student loans are in deferment, we have to go off your worst case scenario. Like, what is the risk here? What is it going to look like when they do have to start paying? We have to include that and consider it. So we do always have to include a student loan payment in your debt, but there are ways to be strategic about it.
Well, that's good to know, because I think a lot of people, they have $70,000 in student loans, and it's just like all they think about is the debt. And I think it's overwhelming. So they don't even think that this is a possibility for themselves.
I have people with way higher debt than that in student loans. I have a doctor who has $800,000 in debt.
Oh my God.
I have another woman who's like a city council woman, and she has like 320. So the good part about it is when you have that kind of enormous debt from student loans, you normally have a really good paying job to help you out,
Right. Yeah.
And then my ratios are okay because the income overweighs the debt. But I have student loan debt all over the map. I have some sweet people who are like, I have enormous amounts of student loan debt. I don't know what to do with it. And it's like 13,000.
Oh my gosh.
And you're like, oh my God, honey, I've got a client who has 10 credit cards higher than this. But, but that is very sweet. But it also lets you know, like, okay, so they're conservative, and let's get them on an income-based repayment plan and make sure that they feel really comfortable with their payments. I'm probably going to keep their ratio max lower. And, you know, it just gives you an idea of who they are.
Oh yeah, absolutely. Well, I like all these approaches that you've mentioned, because it seems like, because I think that some lenders out there, they just want, they just want the business, but it's not a very like a boutique experience where, when you're going to buy a home, you need to assemble a team. Your agent, your lender, like you're putting together a team that everyone's going to work together so that you can get the home that you're looking for. So I like that, the approach that you take, and you really take care of your clients. I've noticed that. And I'm so grateful that you came on today to provide value for everybody in Facebook land, and answer some questions. And I want to show the screen though, right here, just because it has your information right here. So if you guys want to contact Natalie, you can take a little screenshot here. That's her phone number, her email. You can direct message me, you can email me, you can email Natalie, and we will make sure that you are taken care of, that your questions are answered, and that you are in the place you need to be to buy your home. So, and are you doing Zoom calls right now with people?
Yeah, if they want to get on a Zoom, I will, absolutely. Most of the time it's just over the phone. Zoom is great when you're trying to reach a mass amount of people.
Right.
But I don't like to be distracted at all when I'm on phone with clients.
Okay. Yeah.
And so it helps me focus more if it's just on the phone with them, when I'm gathering information and taking numbers down, and I'm writing a lot when I'm on the phone with clients. And so yeah, I don't want to be distracted and have to like look at that. But I have a few, because look, I take a lot of personal information from people. So they should and need to feel comfortable. And if a somewhat more in-person meeting with them makes them feel more comfortable, then of course.
Gotcha. And how important is it for somebody to actually interview their lenders and not just go with whomever?
It's important. Yeah. Yeah, they need to feel comfortable, and they need to know they can trust them.
Right.
So if upon the first person they go with, that's not the vibe they're getting, and that's not the person that they want to work with, then they get a different recommendation. I definitely think that recommendations and referrals are best in this case. They should know that the person they're about to get with gets things done,
Right. So, absolutely. Well, Natalie, I want to thanks again for joining me and everybody out there today. This was a lot of fun. I hope, guys in Facebook world, that we could answer some questions for you, provide some value, and we're available if you need anything. And thank you so very much for joining us tonight, Natalie. And everybody out there, and everybody stay safe.
Thank you, Kerry.
Yeah, thank you. Bye.
Bye.